It's Wednesday and all eyes are on politics today. As we start off the session, I'm joined by Keith Bliss from Cuttone & Company. Keith, thanks for joining me today.
My pleasure, Remy.
Well, as we head into today's trading session, all eyes will be on Donald Trump. Now, the president-elect will be holding his first press conference, and this comes on the heels of President Barack Obama's farewell address. But given the uncertainty surrounding the administration, what will you be paying attention to?
Well, I think he's going to try and clear up some of that uncertainty today around his economic policies and proposals that come through. So the first one I think we're going to hear out of President-elect Trump is going to be around tax reform, both on the corporate and the individual level. And if he says what I think he's going to say, which is a vast reduction and simplification in both the corporate and the individual income tax regimes, you're going to see the market rally pretty hard off of that news. A lot of people will try to suggest that it's already been priced into the market. I don't think that's the case. The market has rallied a little bit on that news, but until they hear some definitive proposals, there's still more room to maneuver. And that coincides with where we see the equity market right now. Despite its run up, it's still trading at all-time highs, the NASDAQ hitting an all-time high seemingly daily. We still don't have the market overbought yet. So there's still some room to run in all the major indexes.
And if we take a look at the levels for the equity averages, as you mentioned, the NASDAQ and as well as the other averages have been hitting record highs. And it does seem as though the Dow 20,000 remains elusive, but a lot of the bond kings have been paying attention to the 10-year, and they've been talking about certain levels such as 2.6% or 3%.
Right.
But what are you watching for?
Well, all of the above, and you have to. We've grown accustomed and we've grown conditioned over the last 5 years to look at several different correlations at the same time, unlike we ever did in the past 20 years. So there was never a time that I remember, for example, like we saw at the end of last year, where bond prices and equity prices were moving in lockstep, where you have gold rallying at the same time you have equities rallying like we're seeing today. So what I'm really going to be looking for, and I think we'll see some real movement once Trump starts speaking, is yes, will bond yields start to spike up to that level? You're referring to what Bill Gross said is probably a workable level for the 10-year at 2.6%. A lot of people need to bear in mind that 2.6% is higher than we've seen in the last 8 years, but still far below historical averages for the 10 years. So I think we will get there. The U.S. economy seems poised to heat up even more than we've seen in the last 8 years, and that will have a spike in rate.
And Keith, as we head into the rest of the week, we have earnings coming up, and we have a 3-day holiday weekend, so we'll get a little bit of a break in between more earnings as well as next week's inauguration. So in terms of the earnings reports, what will you be paying attention to aside from specific sectors?
Well, obviously we want to see what happens in the sales figures for the fourth quarter. It's been well publicized that the earnings recession is due to be over in the fourth quarter.
Sure.
I always like to actually see the numbers before making that kind of prediction. But what's most important to me in any earnings quarter is top line sales. Not bottom line EPS. While that's important to the analysts and important to a lot of investors, they need to know how much money they're making per share. I understand that. But it's really about top line sales, because if we have a good growth trajectory on that metric, then that portends well for the futures.
And Keith, before I let you go, since we're talking about earnings as well as policy, as we head into the new year, we continue to see U.S. dollar strength. And of course, if this dollar strength continues in the long term, that will have implications for trade as well as exports and imports. So where do you see the currency going this year?
Continue to strengthen. Interestingly, in a short-term basis, we actually see, because the dollar has pulled back some, even though it's ticked up a little bit in the last couple of days, we have the dollar oversold at this point in time. And counterintuitively, that's actually a very strong correlation and pattern for U.S. equities. When the dollar gets oversold, because the dollar will revert back to a mean, and therefore equities will be pulled along with it. Maybe that'll be the catalyst to get us above Dow 20,000. I think this past week, and listening to some of the speeches out of the Fed officials has been instructive, particularly Boston President Eric Rosengren, who is an avowed dove over the last 8 years. He suddenly got very hawkish about interest rate policy and monetary policy, and he thinks that we'll probably have to raise more. They'll have to raise more than 3 times in 2017. He's not a voting member on the FOMC this year, but his words do carry a lot of weight. So I think that will make the dollar continue to rally. I think the multinational corporations, mostly in the Dow, will figure out that dollar strength. And it's really going to benefit the smaller companies that do the majority of their business in U.S. borders, and that's the Russell 2000. If I were a betting man right now, I think I'd get long a bunch of IWM, which is the ETF that tracks the Russell 2000, and let that ride. I think that's going to be a strong performer this year.